I guess what I'm getting at is the concept of money is just basically an idea.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, this is kind of a philosophical question, but where does money come from, and how does that apply to trading?
The system that most countries, or I think all countries maybe, are on now is money is debt. So currency is debt, I should say. Currency is not money. That we should make that distinction. So currency is the papers or the digits, the zeros and stuff, and the ones and zeros that they send through computers, bank to bank, and company to company, and person to company, and so forth. So that's all debt. So I'm pretty sure most countries now have a central bank where the country has basically said, you make the money, and then we'll borrow it from you, and we'll pay you back more. Okay. Mm-hmm. So what happens is the countries are basically in debt to the private bank. In the past, it used to be that the money was tied to something like gold or silver, where you could take your money, go into a bank or whatever, and they would give you gold or silver for that paper. So there was something behind it. But now, of course, in the US and in most places, it's not the case. In the past, in places like Canada, like they have it on the books there that the law is that the bank, it's a little bit different because they have a public bank, whereas most countries like the US have a private bank, right? It's private. It's owned. Shares of the bank are owned by private individuals and so forth. But in Canada, it's a public one that was meant to give interest-free currency loans to the government. Somewhere along the line that changed, and it wasn't interest-free anymore, yeah. Right? So that's interesting in itself. But in general, I think most like countries that people think of, like, you know, England and US and Australia, New Zealand, places like that, they have that central bank. So it's not really money, it's debt. And that debt is owed by the country, so they pay it back. So what we do as currency traders is we're just trading those debt notes essentially, right? And if you look at history, obviously we don't have any examples of a fiat currency. That's a fiat currency that doesn't have anything behind it. It's not really exchangeable for anything. It's just everyone just accepts it, that it has value. There aren't really any examples out there of fiat currencies, existing for long periods of time. I mean, I think most of them die within 50 years or so. So technically, I guess, I don't know, was Bretton Woods 72 or 73, something like that. So we're like 50 years now, I guess, into our fiat currency in the United States, right? So yeah, so most of the time they end in it could be a crack up boom, or it could be hyperinflation, but they end poorly most of the time. Yeah. So yeah, and most people don't realize that, right? They think of money as having something, and it does. I mean, because people will give you a computer or a car or a house if you exchange money, so it does have value. But that value's been diminished, obviously. If you look at, in fact, I was just looking at it yesterday. If you look at the Australian dollar since 2020, it's $100 in 2020, which was less than 3 years ago. 100 Australian dollars is now today equal to 117. Another way of saying that, you have to have $117 today to buy what you bought for $100 in the year 2020. So that's a big, 17%. I think it was like 17.3% inflation in like 2.2 years or something like that. So pretty crazy. And that's the case across the board, right? So yeah. Well, why are you asking that? Why? Just curious.
Well, I mean, I'm just trying. I guess what I'm getting at is the concept of money is just basically an idea, right? People say, "Oh, let's make this thing called the dollar. Let's make this thing called the yen. Let's print it up, and then we go out and trade it." So I think that a lot of times people think that there's a limit to the amount of money out there, right? But there's obviously not a limit when you can just print it up like that, right? So I think from a trading like psychology standpoint, I think it's important to remember that money is just an idea, and if you can come up with some good ideas, you can make you can make money, and there's really no limits, right? In terms of the supply out there.
Yeah, that's a really good point. That's a really good point. I like to think of it like that, like what you're saying. Another way of saying what you just said is that it's the most replenishable resource. Like
Yeah,
arguably, do you know what I mean? Like water
yeah, yeah.
is more scarce than money.
Hmm.
The Reserve Bank of Australia technically went broke, as in they had they had more go out than they come in, and they were net negative. Like they technically have gone bust, but they just keep printing more money.
Hmm.
And I don't know if that's the case with other central banks or what have you, but like that's so that just shows like like they just they didn't have enough money, so they just make more. And people, I think you're right. Like, and I've fallen trapped like years ago. I fell into this trap and had to kind of pull myself out of it, of this idea of thinking like money is, I don't know, like so scarce or whatever.
Hmm.
But I start thinking about it, and exactly like what you just said, I thought, wait a minute, hold on. No, wait a minute. This is like water is more scarce, or avocados are more scarce than money. You know what I mean?
Yeah,
Like
yeah, yeah.
anything is more scarce than money. Um, uh, Pork bellies. Do you know what I mean? In some ways, I wish I was I traded futures, because future, at least with oranges and pork bellies and things, like, do you know what I mean? It's a thing.
Mhm.
You know what
Yeah,
I mean?
yeah, yeah.
It's like you can put your hand on a pork belly, right? You can grab some soybeans or some coffee beans. But when it comes to like currencies, it's just like you say, it's an idea. That's it. Somebody's idea, and they put it into a computer, and then we all agree, yeah, that's we agree that that's about worth about the same thing, right? We all kind of agree that the value is about right. Yeah.
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 Yeah. So what would you say? That's a good point, because what would you say about somebody who brings up like that Gordon Gekko line about like you shouldn't make money off of the buying and selling of others or whatever, right? Or was that Bud Fox, one of the people
I don't
in
know.
the Wall Street movie, right?
Right.
And
Yeah.
so some people might think that, okay, trading currencies is bad because this is debt. Some people
Hmm.
might say trading currencies or trading anything is bad because you're just making money off of the buying and selling of other people. So what would you say to that kind of mindset?
Well, I think that's really weird. Like, because if you have a car engine, like a petrol based engine in your, it has to have oil or it will seize up.
Mm-hmm.
And if you look at markets, go and try and find a market where they don't have a lot of a lot of exchange going on. There aren't a lot of sellers and buyers, and you will see how they seize up. And
Mm-hmm.
so if you don't have speculators in any market, they're literally the lubrication of the market. They make the market go. And if you didn't have property investors, okay, like if everyone who bought a property was just they were going to live in it and that's it, and you didn't have property investors, same thing. Property investors lubricate the housing market, right? Which is
Mm-hmm.
or the property market, which is a very slow to move market. And used car salesmen, they lubricate the car market, right? So like all like so I don't know. Then you have to go and you would have to go to your local swap meet or your local market and say that all those people are just as bad as Gordon Gekko or whatever. You know what I mean? Because do
Yeah.
you know what I mean? Like it's just
Mm-hmm.
so I think it doesn't really matter what's being exchanged. It's really important that we have speculators in there somewhere, because they're the oil in the engine and it lubricates things. Otherwise, you go and try and sell like a I don't know, like some currency in whatever they use in the Marshall Islands or something like that, right? You
Mm-hmm.
take that money from the Marshall Islands and you take it to Turkey, and you tell me how you go. Okay, let me know how you go.
Mm-hmm.
Right,
Yeah.
like
Yeah.
that's what happens when you have a market that doesn't have a lot of speculators in it, because no one's speculating on the U.S. Or on the Marshall Islands currency. I don't even know if they have what their currency is, but do you know what I mean? Like, so that's really, and it's the same thing with cars and homes and pork bellies, everything. We need to have those people in there. Otherwise, just everyone's transaction fees go up. That's
Mm-hmm.
that's the reality. Any market that doesn't have speculators, because speculators will drive down the transaction fee because they drive up the frequency of transactions. So the brokers or the people who are doing the intermediate, they have to reduce their. If you think about like stocks, when I was trading stocks in the 90s, we had to call into our broker and they had to call into the exchange, and even with a discount broker, it was this, you know what I mean? And now the fees have come down so much trading stocks. You can trade shares, from anywhere in the world on your computer, and it's like really cheap. So so my position is that if you want the transaction cost to be low, if you want it to be easy for you to sell that thing, you must have speculators selling and buying that thing. Otherwise, you'll see what happens, right?
Yeah, I agree. And if you take a look at something like eBay or Amazon and think about what life would be like without those websites, and those, Amazon has a lot of individual sellers, a lot of speculators. Same thing with eBay, they're all speculators basically, right? And they bring us good products. I mean, you couldn't have some of these products cheap without these people. So yeah, definitely.
Yeah, definitely.
All right, cool. Thanks, Walter.
Thank you. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.